All right.
Hi, and we're here with Monday Moment with Quinn. I'm with Dion. How are you, Dion?
Hey, Quinn, I'm great. How you doing?
I'm good, thanks. So today I just want to talk quickly about, I have clients who, usually refinances for a couple of reasons. So let's discuss refinancing for debt consolidation.
Yeah, sure. So I'll just explain refinancing in general. It's the process of accessing the equity in your home to potentially, borrow to do more. Or sometimes it may not be necessarily accessing the equity, but sometimes taking your mortgage and restructuring it, maybe over a longer term, which results in lower payments. So let's talk about firstly, yeah, people accessing for the sake of debt consolidation. So I'll give you an example. It's probably easy to work with an example. Let's say a property was purchased 5 or 10 years ago, let's say for 400,000. And let's say that people put down the minimum. And when you put down the minimum, once you add back the mortgage insurance premiums, you're almost borrowing 100%. So at a $400,000 purchase price, they were mortgaged almost to 400,000. So what happens over time is that the property grows in value and the mortgage gets paid down over time. So let's use a round number. Let's say the property is now worth 800,000, which is probably the case, and the mortgage has been paid down from 400 to 300. Okay, so that's the numbers we're working with: $800,000 house, $300,000 existing mortgage. Now, along the way, maybe these clients have collected some consumer debts. Maybe they've got a couple of car payments. Maybe they've taken on a loan for their child's student loan. Maybe they've taken on a personal line of credit to help a family member or do some renovations. But all of those loans are usually at much higher rates than at a bank, or sorry, at a mortgage rate. And as such, they'll come to us with all these different things at 5% and 10% and 7%. And we may be able to consolidate them into a much lower payment. So let's just say they collected 100 grand worth of other debt over this time. Then the mortgage, which is at 300, we could increase it to 400, get that extra $100,000 and wipe out that other debt. And the interesting thing too is, let's say the mortgage payment on that extra 100 might be, say, $500 a month. But if they have two cars and some other loans, when you look at the payments on those things, they're probably well over $1,000 a month. And so we're getting them a lower rate, and also it results in a lower monthly payment. So for those reasons, a lot of people look at refinance to reduce their debt load and get cheaper rates rather, and get a lower payment.
Okay. What about refinancing for investing purposes?
Yeah, so you know what? I'll continue with this same example. So let's just say that this family, they've consolidated their debts. They're now on a much better footing. Now what they could potentially do is not only access that extra 100, but they could actually access more. So using this imaginary value of, say, 800,000, what all your listeners should know is that most banks will happily refinance you to a maximum of 80% of the value of your property. So if the value of the property is 800, then they'll actually finance you to 640 as long as you qualify. And let's assume that you do. So in this same example, the clients have a $400,000 mortgage, which has consolidated all of their debt, but they could access an extra 240,000 for a total debt product of 640. And then with that extra 240,000, they could take some of it, let's just call it 100, and use that 100,000 as the down payment on a rental property. I think we've discussed purchasing of rental properties in earlier calls, but what's important for everybody to just know is that, let's say you want to buy a property for 500,000, you don't need to have 500,000. You need to have the down payment of 20%, which is that 100. So in this example here, this family could potentially get themselves set up to purchase two properties at $500,000 each because of that extra 240 they could access.
Okay. And is there a time during the mortgage period, or at any point where you would look at it and consider, okay, now is the time to refinance?
Yeah, well, I mean, firstly, you need to have the equity. So if you purchased your first home with just 5 or 10% down, and it hasn't been several years, it's unlikely that you're going to have the equity to access, right? But then the other thing is, yeah, if you've had the equity if you've had the home for a while, you have the equity, but then you've accumulated these other debts. That may be another trigger for you to consolidate. Or if you're just, like you said, like looking to invest, it's more so about what's going on with your life rather than where you are in your period of your term of your mortgage as to when you might want to refinance. I will say this, the cheapest time to refinance is at the end of your term because there's no penalties involved. So let's say you took a 5-year mortgage and you're 2 years in. If you were to break your mortgage to consolidate stuff at that point, there might be a penalty to pay, or there will be. But sometimes I can tell you that even when you look at the math, the paying of the penalty and the consolidation of all these high interest rates into a much lower rate generally results in a better outcome as well. So in a perfect world, you'd only ever do this at your end of your term, but in the real world, it happens all the time.
Is there any fees involved with the refinancing process above and beyond whatever penalties there are for the mortgage?
Yeah, sometimes there might be legal fees involved, and sometimes there might be appraisal costs involved as well. So again, that'll be discussed at that time to figure out whether or not this makes sense. Some lenders do cover those costs depending on circumstance, depending on the value of the new money. So, but it's not a guarantee. So we'd have to talk about it on an individual basis there.
Okay, so the best thing to do would just to have that conversation first of all to see at what point their specific situation is at, and then go from there, and then figure out what
Yep.
what plan. Okay,
Yeah, that's
good to
right.
know.
Yeah, I would be happy to help anybody who has questions around refinancing for debt consolidation or investment or both.
Oh, for sure. We'll have the discussion about the investments and see where it's at, and then go from there. Thank you so much for joining us today, Leon. Hopefully you have a wonderful week. Enjoy this hot weather while it lasts.
Oh yeah,
We'll
I
see you
love it.
next Monday.
Okay, see you. Thanks. Bye.
Thanks. Bye.